All right, so we made it through the election, finally. That was a long time coming to finally get to that big expected risk event last night. And the market kind of had an interesting reaction to it, opposite of what we saw in 2016. A lot of our market scholars who went to class yesterday in my trading room yesterday, we talked about that as the possibility going into last night, and that's how it played out. Now the question is, are we able to sustain it? Last time we did. In 2016, we were able to sustain it. We had a clear winner. This time, we don't quite have a clear winner yet. So how does that play out into our expectations, especially how we closed the day coming off of the highs down towards the close? How did that impact these different technical indicators that were looking pretty darn bullish throughout most of the day today? How'd they finish by the time we're all done? So I'm going to break that down. What are our expectations going into these next few weeks? Especially going into November expiration, and then ultimately how will that play out, and how will we know that we are that these upward moves that we get, strong bullish moves that we get, are breakout moves, or whether or not it's just a noisy move inside of a range. So that's what I'm going to talk about today. Our trade idea is also a similar stock that made its own abnormal move, and the question is, how sustainable is it, and how can we trade it? So let's go ahead and get started. Today is Wednesday, November the 4th, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 here with the market forecast indicator. Quite the day today, quite the reaction here. You can see a nice good rally, though we didn't close at the high of the day. We ended up closing, as you can see, right on that 62% retracement level of this decline, right? The September decline that we had this kind of false breakout with on above the 78% level to, the expectation to new highs. We weren't buying too much into that breakout because we had, quite the parabolic move here. I'll take a look at that here in just a second. Then we fell back down into the retracement zone, through the retracement zone. A little bit of a false breakout to the downside here. Long lower shadow. We turned back up above it a couple days ago on Monday. And then yesterday into the retracement zone, and today through the retracement zone at one point before falling back and closing at the top of the retracement zone with a long upper shadow here today. So a little bit of a kind of the near-term line was a lot stronger when we were at the highs of the day. Not so strong now. And the intermediate line did turn up sharply. Still not above its market sentiment line. Now, that's not the case for the Russell. Incidentally, the Russell had one of the weaker moves today, and it ended up with this intermediate line already above 50, right? So dark green shading in a green line, and its intermediate lines above its market sentiment. That's not the case for any of these others. In fact, the Nasdaq's market sentiment line has now fallen below the 50th percentile. And you can see the same thing. We see the same thing that we saw in the S&P, where we stalled at the top of this retracement zone of that September decline. And there's your Dow Jones Industrial Average, also not really unable to get above just barely getting above the moving average there and turning it green. But you can see its near-term line fell. It's barely, but it fell, and so did a lot of these momentum lines. Again, because of that long upper shadow is what caused these momentum lines to drop down. So I mentioned that back over here, I mentioned this 4-day move over here where we got that fake out breakout above the 78% retracement level. That was 4 consecutive 1% days higher. That all 4 of them had at least a half a percent, 50 basis point opening gap. That's extremely rare. We haven't seen that, like I tweeted out on that on October the 12th. We hadn't seen that in a long time, years. We haven't seen that type of move. Again, 4 straight 1% moves. You can get 5 straight moves to the upside here, for an example, or even 7 straight moves to the upside here, but only 2 of those 7 were above 1%. Over here, only 3 of the 5 were above 1%. And here's a 3-day move coming off a really steep low point. A 3-day move where all 3 were above. In this case, all 3 above 1%, but one of those days was a pretty sharp opening gap to the downside. So here, now we're getting 3 consecutive 1% days again, with today being above 2%. We were actually above 3 at one point. And then all 3 of these were above 1%. Opening gaps to the upside. So a very similar type of parabolic move that we're getting now to what we saw there. And that's, again, a little bit of a concern, especially considering we close with a long upper shadow. So it's a good bullish day today. It's not a breakout day today. We're still stuck in the middle of this sideways action until we break above the 78% and hold, or we break down below this 23% line and hold. Either one, until we break out of one or the other, there's not a trend going on. It's just, up noise and down noise, and considering that it took a couple of weeks here to go down from top to bottom, and then to retrace most of that within 3 days, usually it's the other way around, where it takes a long time for it to go up and it takes a short amount of time for it to come down. So a little bit of just a pause, right? When maybe it's a good bullish strong move, but maybe not as bullish, at least not a breakout move yet. Now, could this lead to a breakout move? Yes. Do I think it will? Probably not. I think this might be the high point through at least through next week, because as we shift now from results to whether or not these results will be accepted, right? Before the question was, we're going to get a result. Now it looks like we're, at least from a betting odds standpoint, and it seems like we're going to get a result sooner rather than later. The question will be whether that result will be accepted and how much courts get involved. And that's going to be the question, in my opinion. I think the rest of this week will be getting the result. And we'll probably trade within this range. If not, I don't think we'll go up to a much higher high than today's high, but at least we'll probably trade within the upper part of this range the rest of this week as we get this what is now pretty largely an expected result. Next week then becomes a matter of how much will the courts get involved. And the more they get involved, the more that there's a question about the result, the more we'll probably come back down towards the bottom end of this range after testing the top end again. So it's just the nature of, until we break out, right? Until we get an accepted result and we are clear, and for that matter, the Electoral College votes, that's probably what's going to ultimately take for this to break out into a new move. Until then, upward moves, downward moves are going to be very tantalizing and enticing, but they're not necessarily breakout yet. Alright, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here, bottom right corner of your screen, hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us that you liked our video today, and it tells us you want to do another video. You want us to do another video again tomorrow. It's a quick way to give us feedback. If you don't like our videos, you don't have to click on anything, and of course, you don't have to watch. But if you do like our videos and you want to let us know, you can do it with one click right now while you're watching. Also, while you're down there, comment. What did you get out of our video today? What stood out to you? What questions or comments do you have? Post those down in the comment section below. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us here on our blog, check out some of these other things on this page, including our Market Outlook live video. Again, if you click on this, it takes you to the same page here that's in this menu, the live trade review. That's every day I do the Market Outlook. I do a live trade review where I go over all the old trade ideas. We made a lot of trades today, actually, on some of those old trade ideas. So you can check that out there. This is for all of our subscribers, our monthly and our premium subscribers. You also get access to all of our trading rooms, our Q&A sessions, as well as premium resources and tools, and our class forums. Those are all available just for our premium subscribers. But our monthly subscribers get access to that Market Outlook Live too, and all the trading rooms. So check those out. Come down here, hit this heart. It opens up a new window. Hit that like button right there. Hit this thumbs up icon, takes you to the Facebook page. I invite you also to click that like button. Again, the more you do that, the more our content gets to all of our followers because of all the engagements it has. It benefits you too because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most, especially Facebook. But both of them do that, and so that's why we make it really easy for you to engage with us here. Alright, now let's take a look at the weekly chart here, and you can see Look at this transition candle. This rally has produced upper and lower shadows, very small body, very transition candle, but we don't have much of a downward trend to transition to. So usually what that means is we'll probably get some more transition candles here before we get a breakout one way or the other where we get this extended Hakinyashi trend, right? The Hakinyashi smooths out trends, and right now we're not getting a trend. And that's kind of reflected here. We got one bearish candle and then all of a sudden another transition. So that usually leads to more transition. So that means expect some more ups and downs. And I mentioned to you before the possibility that we might flirt with that 200-day moving average, which continues to rise well above the 38 or the 38% retracement, getting pretty darn close to the 23% retracement of this big rally that we had that we still haven't really broken out of quite yet. Let's take a look at the 3 green arrow chart. We got really darn close to 3 green arrows. That late pullback at the end of the day brought that histogram back down. There's your big 1.5 times the average volume, but nothing out of the ordinary. I mean, it was about as big as some of these other days, considering the event that we've been leading up to. So pretty decent size move, and the potential for 3 green arrows. It's very darn close. You can see the histogram rally there. It is our first day above the 17-day moving average, so we need to see that hold for us to really feel confident about a change in direction here. Remember the QQQs, which is the most bullish today, it was also their first day because they finished yesterday below the 8-day moving average, so they also finished above. As a result, the 8-day is still below the 17-day moving average here, which means this blue line is still below 0, and we'll see if that transitions or not. It's a pretty significant rise pretty quickly instead of a nice gradual rise that turns into a nice base. A quick rise like this makes you wonder, again, if it's going to be able to hold that kind of rally. Let's take a look at some of these other charts. If you look at the RSI, we are back up above 50 on the RSI. I'll take a second here to load up. There we go. So we are back above 50, though not getting above 60 yet. We are back above 0, though we're not back above positive 100 yet. So again, let's follow up with this move today with a good move tomorrow, especially if we can break above that high point. Then we'd feel really good about, again, especially getting above these highs here, we'd feel better about this bullishness. Until then, it's still a question mark, especially with the long upper shadows of the last couple of days and the gaps. Again, it's not as bullish to get gaps, such significant gaps on such significant moves consecutive like that. Again, that led to a period of weakness before, and there's a good chance it could lead to a period of weakness here. Again, not fall off the cliff weakness, but a good period of weakness again. You look at the DMI, great move higher in the positive index. It actually was above 30 at the highs of the day, but again, that late pullback brought it back down below 30 and kept the negative line well above 25. We did get a crossover, but not, it's not to the point where we're really bullish here. So it looks, all these indicators show that, we're that close to being bullish and things look really bullish, but it's not breakout bullish. And you can see that as well on the trend strength indicator. I mean, we are not as bearish because now we're back to noise and we're back below, we're just barely below negative. We're at -1/4 here. But at least we are above the cloud, and we are back above that blue line. Now, it's only one day, so like the 17-day moving average, we've got to hold this breakout above that blue line. Otherwise, it ends up being a really good sell signal. If it's just a one-day move above it and we come right back down, say below the cloud, filling in the gap, and come back down below the cloud tomorrow. All right, now let's take a look at the intraday move. And interestingly enough, so this Fibonacci line is set on the October pullback. So we had the September pullback, the larger one, and then this October pullback. And you can see where we stopped the trading today. So we gapped up, continued higher throughout the day, and stopped right at that 78% retracement level of this October decline. And then pulled back, breaking through the point of control, pulled back down to the point of control where you're, as of right now, finding a little bit of support. Not a whole lot of movement right now so far in the after hours. And you can see, again, this is a pretty decent size volume node too. So getting above 345 and staying above 345 is very significant. Now, we did get through it, but we weren't able to stay. So now the question is, will we be able to stay? Breaking back below the 62% level puts us back into the retracement zone, as well as a very small volume. A little bit of volume there at the midpoint of the range, but puts us back into a very small volume node. So, and then filling gaps, right? 1, 2, 3. There's the last 3 of the 4 gaps that we saw that finished that run. So we'll kind of keep an eye on that going into tomorrow. I mean, my expectation is, again, that we've seen the high in the short term, that we'll get some volatility now as the market largely has its result. Unless something drastically changes, the market largely has its result. Now the question is, how long will it take to validate the result through whatever legal system involvement there is? I think that, as we saw in November 2000, when it took a while, it took a few weeks for Florida finally to say who their winner was, that was a negative period for equities. It was the beginning of a bear market. We were kind of in bear market mode, at least the beginnings of one there. But the market did not like that. And so, again, I don't feel like we'll be as bearish because we're not in a bear market now. And I don't expect us to fall down like, huge. But I do expect us to, fill in these gaps over the last few days. This one, not so much. We've already filled that one in. But there's a good chance that, ultimately we fill in these couple of gaps as the market kind of wrestles with that expectation of, how involved these courts will get and the election process in these different, especially obviously in these battleground states. It will be interesting to see how much that keeps focus off of, say, this new stimulus deal, because there was a news cycle for that has been shut down with the election cycle. How much will the stimulus be an issue or not? Because that's one of the reasons why we've been bearish in September and especially in October, because we've been kind of lowering our expectations for a new stimulus deal. And then, of course, the vaccine deal. It wasn't vaccine related, but the healthcare sector, as you'll see later, had a really big boost today. But, again, how much will this new news cycle, in the case of the election cycle, maintain kind of dominance over other news cycles? Let's take a look at today's volume. It was above average, 126 million. The range was pretty large, 8 points, not including the, let's see, we closed at 336.03. The low was at 339, so we had 3 more points. So we pretty much doubled, pretty close to doubled the average ATR with 127 million shares trading. So that puts us right here at 127. That's a pretty big number. If we continue to have above average volume, that's not a good thing. That this line rising usually rises with bearishness, not bullishness. And then again, 12 points is very, very high too. Again, this line rising, it typically coincides with bearishness, not bullishness. So it is one thing to get some bullishness on a breakout, but again, we're not breaking out yet. And so to get that kind of a move within a range is not nearly as bullish and may lead to, especially since we're still kind of more towards the lower end of the range, may lead to some more moves towards that lower end with some bigger moves here before all is said and done. As you take a look at volatility right here, volatility still is high. Like, we did drop down below 30. It was early in the morning. That was the lowest volatility. But you notice down here, we are still in the bearish territory for risk appetite. Like, we're still above 95%. That's still relatively bearish. So breaking 95% and working our way down, now we're done. Right now that's a breakout move. Will probably coincide with a breakout move on the indexes to a bullish trend, and we're set to go. But without that kind of breakdown in volatility, then again, we're still pretty high, and that means to expect still bigger moves. And bigger moves are not necessarily bullish. They tend to be more bearish. Again, when these lines go up, that's not bullish. That tends to be bearish. Now, I don't think they'll go up sharply, and we're not expecting craziness, right? Like this kind of move here, we're not expecting that kind of move. But, can we get some more of this? Definitely. We've only had a couple of big down days on this new October pullback. But can we get some more like this after some up days? For sure, that's a possibility. So that's something to keep an eye on and I expect this historical volatility will turn up here before we eventually set the low point. All right, so to summarize my technical outlook here before we look at some more things about what's driving the price action today, of course. It was a great bullish day today, but it stayed in a range and it didn't break out. And so a lot of the different technical indicators we look at kind of reflect that idea that it looks great and we returned higher, but not to breakout patterns yet. Now, can we turn this into a trend? Great, yes, definitely. But considering the relatively high volatility that persists, considering the long upper shadow that we finished the day with today on the S&P, that suggests that there might not be we're probably not likely to continue yet, right? Without a continued period of volatility, which most likely would coincide again with election-related craziness, right? And that will reflect itself into volatility in the markets until we're done with that. And then the widely expected bullish move, which a lot of people are expecting. I tweeted out a couple days ago, how extreme the positioning has been on a long-term basis. Everyone's looking for a bullish move coming out of the election, going into next year. And especially now with kind of a divided government, so to speak, which typically, from what a lot of people are saying, can be very bullish for stocks. So if that's the case, then we're going to get that widely expected bullish move, but it might not be as quick as some people expect, at least as quick to election night as some people might expect. It might be a period going into November expiration, maybe a little beyond, where we're still trying to figure this out first with some elevated volatility until that happens. So what do you think? Do you agree with that? Do you disagree? Comment down below as to what you're thinking. Let me know down there, especially if you disagree. Let me know what you're looking at, what charts or indicators you're looking at that suggest why you're either a lot more bullish than I am or a lot more bearish than I am. All right, now let's take a look at what's driving the price action today. And let's take a look at just today alone on this asset class comparison chart. We'll look at 11:04 and look at like a 10-minute chart here. Fascinating moves today. So we started off with two of the oddest bedfellows here, QQQ and TLT, right? Those are not two asset classes you expect would gap up nearly 3% higher together, right? Usually, in a big risk on move like this, bonds fall. And bonds did fall by the end of the day, but you can kind of see they stayed pretty darn high. In fact, stocks, the S&P, barely outperformed long-term bonds. So it was a pretty broad buying on both asset classes. Emerging markets really pulled away from U.S. equities. And then you can see again down here, small cap stocks for a part of the day today were actually down. IWM was down, finished with a small gain. Weakness in the dollar, weakness in gold on a risk-off move. That's not surprising. Weakness in global bonds. That's not surprising. It is surprising to see long-term bonds outpace and nearly keep up with strong moves. It's one thing for them both to be kind of down here, just barely above zero, but for them to be both above 2% together, that's strange. Now you notice again the weakness in SPY, especially here from like the middle of the day. That's when small cap stocks went from a 1% gain down to a loss, right about in this area. The QQQs came down a little bit too, from a nearly 5% gain. Emerging markets held, and bonds actually rallied from that point. You can see commodities also showing some strength as well. If I take a look, at some of these different asset classes, let's start off with the dollar here and see how it performed. You can see crazy moves last night, and by the end of the day, so we had a strong move higher in the euro, so weakness in the dollar going into the election. And then there's last night's move. So started off with a big move to the downside, so a gain in the dollar before rallying back to the upside, and then ultimately finishing pretty flat by the time all was said and done. And we're a little bit downside move in the euro, or in the dollar right now, upside move in the euro. You can see a little bit of a rally, but like stocks, not a breakout move yet, right? And we're not breaking out up above this 78% retracement to a new bullish move. new bullish trend. The intermediate line's turned up, but still below 50. The intermediate line is also falling below 50. So there's still some strength in the dollar yet to resolve itself before we can really get going on some strength. I wanted to bring up commodity prices because they had a pretty decent move higher today too. Again, pretty strong short-term sentiment over the last couple of days, but again, they had dropped so much that again, this is a great rally and a great move the last few days, but not enough of one to really say, okay, we're trending again. And then finally, TNX had the biggest surprising move. So the 10-year yield dropped all the way back down from nearly 90 basis points all the way back down to 76 basis points. Again, a reflection of some potential risk aversion right now that could eventually work its way into equities before this period of volatility is all said and done, which, you know, I'm not expecting like months here. I'm just expecting maybe another couple of weeks before this period of volatility is ultimately done. That started in early September, and then we ultimately embark on a new multi-month intermediate rally, and you know, maybe a few multi-month intermediate rallies, and get that market sentiment line back up to the upper half of the chart and a lot of these indexes, and start a new kind of a long-term move throughout most of next year. So that's my expectations, but in the short term, you can see that's a pretty risk-off move with yields falling that much, that fast, so wiping out full week's worth of gains that quickly. That suggests, you know, there's a little bit of risk aversion that's out there, and people willing to buy bonds just in case things get a little volatile over the next few weeks. But not trend, even that wasn't trend changing. As you see, we still have dark green shading and a green line. China was also a big beneficiary. If you take a look at the major economies that are out there and how they performed, China was up huge, big time breakout move. Korea, big breakout move. India, big bull. I mean, everything had really bullish moves. A lot of these developed markets getting back to, especially in Europe, getting back to light green shading, except for Germany. Germany is really struggling there still. Dark pink shade, it's still below 20. Though it is rising. The rest of these are kind of in the low 30s, the rest of these European areas, whereas the Japan and China, a lot of these Asian countries showing very strong relative strength relative to what's going on here in the U.S., as well as these still bearish trends that we're seeing in other developed countries. So, you know, it's essentially what we're seeing, in my opinion, is a short-term oversold bounce. Even today's move, part of a short-term oversold bounce, because especially like in Germany, we are so oversold, way below the moving average, but we haven't seen a turnaround yet, a change in trend of these intermediate trends yet. Light green shading, yes. You know, green lines on some of them, yes, but not, you know, new highs compared to some of these recent highs that we saw October the 12th, right? The last time we had this peak, this parabolic move on October the 12th. We haven't got above new highs yet, and that's really what we need to see before we can declare a winner, right? Before we can say, okay, all the voting has been counted, and now we are bullish, right? Now we are starting to be bullish again. All right, now let's take a look at the how the sectors can perform today, and this is an interesting chart too, partly because of the Alzheimer's drug from Biogen that really ramped up the healthcare sector, and everything kind of went up in sympathy with that. Very, very strong move there in the healthcare area. But you can see Facebook and Google doing very well in the communication services. Technology also rallied. Discretionary kind of matched the market. Everything else was negative. Financials, industrials, utilities, materials, real estate, energy, staples, all close to either break even or negative. And you know, again, there was this idea of a strong trend rotation, sector rotation into these small sectors relative to these big sectors, and that could keep the market going. But the reality is, and what we talked about in my class yesterday, was if the market's going to stay bullish, and there might be some weakness in the short term, but ultimately, if the market's going to have this bullish move higher over the long term, in the next, say, year or 18 months, 2 years, it's going to be led by what are the biggest sectors in the market. That's how market cap weighted indexes work. It's not going to be led by small areas, not until they're not so small anymore. And what will it take for these big sectors and to be not so big, and these small not to be so small, is a bear market, right? Which will bring these sector weightings back in alignment, so there's not such extremes as there are right now with a lot of these tech areas, especially considering that there's a handful of stocks within each of these areas that just dominate the whole index as a whole, right? That's got to shake itself out first before we get a strong rotation where a bull market is led by something else other than these areas, these strong tech areas. So big move higher. Again, that's kind of a rebound. If I go back to the October 12th high point, so starting the next day there on October the 13th, I mean, here's our rebound. They were so low. They've rebounded up. Communication services is now above its October 12th high. And so is healthcare with today's strong move. Utilities barely below, but it had a new high over here post October the 12th. Everything else, so you can see XLK is still not close to the October 12th high. Industrials and materials are down. Discretionary still not close. So this bounce that we're getting is still not a breakout type bounce quite yet. My trade idea of the day is in the healthcare sector, and it's actually on AbbVie. If you take a look at the move, it was a strong move. It also finished with a long upper shadow, but that's a pretty extreme move to get that far up above its moving average. In fact, when you look at it here, MS, PPO, and you look at how far up above its 30-day moving average we are. So 1, let me do it here, 1 and 30. Simple moving average. You can see it's 95th percentile in the past year. So very, very strong move. If I go back to like say the last 5 years, we're in this, we're pretty darn, 72nd percentile, but that's because we've had these strong moves right there that actually broke us out. Remember, this is not breaking us out of any move. We still have these highs that we're still below and a strong move that is relatively strong for the last couple of years that we've seen has either culminated in a trend or was very short-term temporary breakout before coming back down. So when we're that extreme, it's hard to maintain. If you look at some of these other indicators like the DMI, that's a strong move higher. Again, we saw that over here, and not part of a trend, right? Not part of the end of a trend here that you would normally see these kind of big ADX or the big positive moves higher, the extreme moves higher. They usually can culminate the end of a move, but when they're individual like this, again, at the beginning of a move with a low ADX, relatively low ADX, it's hard to sustain that. You also take a look at like its RSI and its CCI, and you see, that's a pretty strong move higher. In the RSI, that's the highest RSI we've had since back over here, and just one move. And the CCI, again, getting it to its highest level of the year. Again, extremes, right? It's hard to sustain these extremes, including breaking out above that upper Bollinger Band as far as we did, but staying inside of the value area. So you still got that point of control acting as a center of gravity and this gap that we can fill in back down. So very strong support to the downside with some potential for upside move if we were to trade, get above today's high point. That will act as a resistance there with that long upper shadow. So what we did was we decided, okay, well, let's take a look at selling an iron condor on this trade. And we sold the 187.5 put calls. Let's see here. So let's go here, to the 87.5. We sold the 87.5 put. We sold the 100 call option. So we went $5 wide on each side. So we were a little bit further out there because they had $2.50 wide spreads. And we ended up getting about, for a normal position size, about a 50% return on risk. If you see where our break-evens are on AbbVie, you'll notice that we have one break-even at the old high point that can obviously act as a resistance level. And we have another break-even at this low point here at that 38% Fibonacci retracement level, as well as this really strong volume node. So I'm not too concerned about any kind of downside moves right now. These breaking support, I do think we could gravitate back towards that point of control, but I'm not worried about a big breakout to the downside. And right now I'm not as worried about a big move to the upside either, because it's going to take a little bit of time to resolve this extreme move, so that we can move higher in a less extreme way. That's more sustainable and that the stock can handle, at least in my opinion, of course. So that's why we did more of a neutral trade to take advantage of the volatility, and as that volatility declines, this big move, as the volatility declines down and we start getting smaller moves, then we can stay in this range and be able to profit from it. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums, where you can open up any new thread with any questions or comments you have, reply to anybody else's threads about anything we talked about in the video today. And let's keep this conversation going within our community in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, as well as on Twitter and Facebook, and comment on the video. Follow me on Twitter for more content in between the videos. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.